This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently trading below $54,000, now down over 1% over the past 24 hours at $53,953. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So let's take a look at some of our top stories. El Salvador's state-owned Banco Hipotecario tapping 4 crypto startups for blockchain-focused banking solutions. Tosobi, the company behind the Open Bank project, API 3, Credo, and Sovereign will bridge the country's traditional banking system with digital custody services, DeFi lending and trading products, and Bitcoin-backed stablecoins. Meanwhile, Tether has loaned $1 billion to Celsius Network. According to a Bloomberg report, Tether has loaned billions of dollars to crypto companies using Bitcoin as collateral, and their reserves include billions of dollars of short-term loans to large Chinese firms. In response, Tether pointed to a quarterly assurance attestation dated in June from accounting firm Moore Cayman, offering a snapshot of their fully backed reserves. USDT held on exchanges rising 52% on the one-day chart. Finally, Texas is emerging as a go-to place for Bitcoin miners. Core Scientific building a 300-megawatt blockchain data center in the Lone Star State to increase their total power capacity to more than 800 megawatts. And recently, crypto mining firm Argo Blockchain also agreeing to buy 20,000 mining machines for a data center it is building in West Texas. Argo is saying Texas has some of the, quote, cheapest renewable energy worldwide. And joining us now to discuss the North American Bitcoin mining market is Fred Thiel, CEO of Marathon Digital Holdings. Hi there, Fred. Great to see you. So since the crackdown in China on mining, on trading, North America has been seizing the opportunity. What are some of the best places, in your opinion, in North America for mining? Is it Texas?
Well, Texas is certainly a great location because of how the grid works there. The ERCOT grid has a large percentage of renewable energy sources, which is awesome. And the regulatory environment is very friendly towards Bitcoin. The governor of Texas, as a matter of fact, is at a conference this week in Texas and is very open to Bitcoin mining. And so we're very positive about that. We'll be deploying a large number of miners ourselves there, actually, over the balance of end of this year and into early next year.
Right. So I suppose as a miner, where in North America are you finding the most friendly regulations, energy, and such to do mining?
There are a variety of states that are attractive. Certainly, Texas is great. Nebraska is great. South Dakota, Montana, where we have miners today, is excellent as well. North Carolina is great. It really comes down to the relationship a miner can have with the power utility and then the local communities. A lot of the renewable energy providers love having Bitcoin miners behind the meter. So essentially taking offload, baseload energy directly from the renewable source and then supplementing with grid energy. So a miner has to partner with both the power generator and the utilities and the grid operators to be able to operate 24/7. But I think there are plenty of great locations in North America.
Mm-hmm. We've also seen that crypto miners such as Marathon Digital have been rallying amid Bitcoin's recent surge. And I wonder, are your companies correlated to the price of Bitcoin?
Well, I think Marathon specifically is very correlated. We hold over 7,000 Bitcoin on our balance sheet. We're of publicly traded companies in North America amongst the top 10 holders of Bitcoin. So definitely there's a book value tied to the value of Bitcoin as it's held on our balance sheet. We don't sell the Bitcoin we produce. And if you look at our historical kind of production announcements, we produce many hundreds of Bitcoin every month that just continue to add to our balance sheet. So as a Bitcoin holder, long-term, Marathon obviously becomes very correlated to Bitcoin. But it's kind of like looking at the printing presses industry. You can either hold cash or own the presses that print the money. And in the case of mining, the margins are very significant. And so in addition to just the increase in the value of Bitcoin, you get the increase in the gross margins that we generate as an investor. And so that's what makes public miners very attractive.
So you're not only holding Bitcoin, but are you also buying as well?
Well, earlier this year, in late January, early February, we had a significant amount of cash on our balance sheet. We were in the early processes of deploying the miners that we're currently deploying, and we felt it was a good use of our balance sheet to invest $150 million in Bitcoin, which we did at an average price of around $30,000 per Bitcoin, which, based on today's price in Bitcoin, obviously has generated a great return for our shareholders.
Right. So Bitcoin's hash rate has also been increasing, as has the mining difficulty. Will Bitcoin's price gains translate into further profit growth as well?
Yeah, that's hard to predict. Bitcoin's price and the global hash rate are somewhat correlated, but a little bit disconnected. So if you think about 4-year cycles we typically go through, the first part of the cycle is typically very profitable, and cycle typically starts right after a halving. So after the halving last year, we've gone through this period where Bitcoin mining has been very profitable. That attracts more people to want to come into the business. More miners come online. It gets hard to get access to hardware. It gets hard to get access to hosting. So those costs go up. People come into the market regardless. And what ends up happening is, as you're 2 or 3 years into the cycle, all of a sudden, the competition, because of the global hash rate, has become quite intense. Profitability starts coming down, and only the large industrial scale miners like Marathon and our colleagues who are of this scale are able to really survive long term, because we have very controlled costs. We control our capital very efficiently, and also we just are very wary about when we deploy, so that we're constantly deploying at the optimum time in the cycle.
Amid the crackdown in China in mining, do you see any opportunities there, either to partner with Chinese miners or to, I don't know, buy their equipment or anything? What do you see the fallout of that?
Well, I think, the big opportunity is for anybody who has hosting capacity. There are many former Chinese miners um, who are very interested in having their machines hosted in North America and mining in North America. And, we're certainly on the phone on a very regular basis with parties who would love to be able to partner with us in hosting. We don't do that today. We mine for our own benefits only. But there are plenty of opportunities. I think, you mentioned earlier, Core was building a big facility. Core is very much in the business of providing capacity to third-party miners. And so I'm sure they're talking to lots of Chinese miners who are trying to relocate their machines. I don't think there's a very big opportunity in buying machines that were in China. Many of the machines in China were former generation S9s, S17s, older machines. Getting them out of China is a bit of a science. Not many people have tried before to move used machines out of China. New machines is a different story. But I think most miners prefer to invest in the state-of-the-art, the S19 scale, kind of 100 terahash machines, and so would prefer not to buy used machines.
Switching topics, so Bloomberg came out with a report, a little investigative piece on Tether, and I wanted to get your thoughts on Tether. Are you concerned about the stability of the crypto markets and Tether potentially not being backed by reserves that are one-to-one for Tethers?
Well, I think this is a question better directed towards the Treasury Department, the SEC, and our regulators. But I personally think that stable coins should be regulated the same way any financial instrument of their ilk should be. And if it's meant to be a stable coin, yes, it should be backed one-to-one by dollars or U.S. Treasuries, somewhat like Circle has done with USDC. I think that's a very important point for consumers and for investors and for the industry.
And does Marathon deal with Tethers or USDC or Paxos?
No, we are a Bitcoin miner, and we don't sell our Bitcoin. So we operate in our own little world, if you would, in that we work with banks and financial institutions where we do generate some yield on our Bitcoin, but we do that with minimal counterparty risk. And then we're also able to collateralize our Bitcoin to borrow against it, as we just announced earlier this week. So we tend to stick to our own knitting.
Just one last question that comes to mind. With El Salvador continuing to build its Bitcoin adoption rate and introducing volcano mining, is there any plans to, or any talks that you're having with El Salvador or any Central American governments?
Nothing that we're going to disclose publicly, but we talk with parties all over the world who have access to all sorts of very interesting renewable energy forms. And it wouldn't surprise me if over the next 2 years you find Marathon has begun to spread its wings outside of North America.
All right. Fred, thanks for joining us on the show. Appreciate your insights.
Thanks. Great to be here.
All right, that was Marathon Digital Holdings CEO Fred Thiel. Coming up, more Bitcoin analysis with the VC firm Thesis.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
The CoinDesk research team saying Bitcoin's dwindling liquidity show investors are continuing to hodl or hold their investment. BTC liquidity is defined by the ratio of liquid supply to illiquid supply, and this measure has consistently declined since 2019, suggesting that more and more Bitcoin is being held as a long-term investment. This can exacerbate price movements in both directions as demand for the asset changes. Despite a declining on-chain liquidity measure, the glut of growth among exchanges and brokerages means you can still easily trade Bitcoin for currencies or other digital assets. The illiquidity of Bitcoin on chain does not imply trading illiquidity. And you can see more on this chart analysis in the CoinDesk research team's quarterly review of crypto. That being said, Bitcoin's bullish case continues to strengthen as inflation expectations in Europe, the world's largest crypto market, are surging thanks to record gas and electricity prices. Bitcoin's technical charts have flipped bullish after Wednesday's 7% price gain. The breakout is backed by pickup in volumes and accumulation by so-called whales. Joining us now to discuss the crypto markets is Laura Wallendal, General Manager at seed stage venture capital firm Thesis. Hi there, Laura. So just wanted to gauge your outlook on Bitcoin as we see this price bump, though a bit of a pullback right now.
Absolutely. So like all networks, Bitcoin derives its intrinsic value based on the number of users. And so as more users flock into the network, they bring in more capital, which causes the price of the coin to rise because supply is limited. And the market momentum is really exciting for the projects that we build and fund and support at Thesis. We're really focused on three key areas in DeFi, in cross-chain interoperability, and consumer applications. So really, we're seeing growing adoption in this space being impacted by this growing market.
Right. So, in El Salvador, we saw that the national bank there is getting into crypto custody and lending products through DeFi. And as an investor, what kind of Bitcoin-related projects are you looking to invest in? You mentioned some. Can you mention them by name?
Yeah, absolutely. So our studio projects lean towards Bitcoin and really creating more utility for Bitcoin in DeFi. And lean towards Bitcoin really doesn't mean we're Bitcoin maxis. We're open-minded, but we recognize that Bitcoin is an opportunity to observe how money can really work better and really.
Can you name projects that you're specifically looking at?
Yeah, absolutely. So one of the projects that I'm really excited about is TBTC. It is a truly decentralized Bitcoin peg from the Bitcoin network to Ethereum. And then we're also looking at other chains. And so it really brings utility and this decentralized ethos into the DeFi ecosystem.
All right. Just looking back at the price movements, we did see a 1.6 billion Bitcoin buy the other day. There have been a lot of theories thrown out there as what or who that could have been. Was it to escape the credit market in China? Was it to get out of Tether? I wonder if you have any thoughts.
I'm not sure that I can speak to that Bitcoin buy specifically, but it is really interesting what's really happening with Tether, and especially as related to TBTC and seeing some of these assets move from chain to chain, and really focusing on that decentralized aspect in the products and projects that we build and support.
Are you concerned about stablecoins and how they're backed, and do you think that they deserve further audits or some sort of regulation?
Absolutely. It is really concerning, especially when the claims that Tether is pegged 1-to-1 with dollars. When we're looking at how to bring this liquidity from other chains or other assets over into DeFi markets where there's a lot of use and a lot of potential, it's really important to look at how these things are built and how these things are backed. It is really concerning to see, the news with Tether, and I think it's extra important for users to think about how these products are built.
Right. And now just to clarify for viewers, Tether has claimed in the past to be backed 1-to-1 with a US dollar for every 1 Tether. They've since changed that to say it is backed by commercial paper, other forms of reserves. And just finally, to close it out, Laura, any price predictions for Bitcoin end of year 22 or 22?
Oh my gosh, I would love to speculate, but I think it's probably going to increase. I'm not going to say an exact number. The way we look at it is when we've got a bull market, it's time to drive adoption and growth. And when we've got a bear market, it's time to be heads down and build. So I'm looking forward to continuing this adoption and growth phase.
All right, Laura, thanks for joining us. Appreciate your insights. That was Thesis General Manager Laura Wallendal. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.